What is good, guys? It's Ray J back with another video, and in this one I'm going to be talking about the one and only Tesla stock and what you should be looking out for the future. I'm also going to break down what's going on with the overall market, break down what's going on with SPY right now, and talk about what the news, data, and technicals are telling us, and how all of this may affect the market and Tesla going forward. Now, before I break anything down about what's going on with the overall market, before I give you guys my price prediction for Tesla for tomorrow, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And the last thing is, if you guys can, please check out the Moomoo link down below in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you're guaranteed up to 5 free stocks, each worth up to $2,000. And the best part is, any could be a free Tesla share. The offer ends in just 12 hours. Check it out before they run out. With that out of the way, let's get on with the video. Tesla was up 2.57% for the day on Friday. I was not able to report anything on Friday or Saturday due to a family emergency that happened. One of my aunts ended up passing away, so I was actually unavailable during the time, and it's very unfortunate. It just makes me remember how important life is, how important it is to cherish every single moment in life. But I'm back now, and I will be back for daily updates from here on out. Now, as far as Tesla goes, I mean, we did have some relative strength, up over 2.57% for the day. And we did get a very positive reaction after the PCE report that came out. Now, when Amazon's report came out, right, overall, Amazon saw a very, very nice pump. And this was very good for the market in the beginning. This actually happened on Thursday after the market closed. Then Amazon saw a very, very big rejection and ended up closing kind of red. And that was after some concerns from many of their board members and also for guidance. And that's because of the fact that we are anticipating some declines. So as you can see on Amazon, big pump and a bit of a sell-off. And Amazon continued to sell off just a little bit. And despite Amazon doing that, the market actually ended up squeezing. And why did the market squeeze? There are many different factors. One of them is the fact that uh, we had some really, really good numbers from PCE, in my opinion, compared to what some people were expecting. It was in line with expectations, not too bad and not so horrible either. Not too horrible, not too great, sorry. Just in the middle. But some people were expecting PC to actually shoot up and for us to see this very big spike in inflation. And we didn't really get that just yet, according to the data. But it could most definitely happen by the next CPI report, maybe even later. We did see gas prices go up a lot, and gas does have a big effect on the overall number, not just because of gas alone, because of the opportunity cost and the way it impacts other industries, right? So, for example, like transportations, it becomes a lot more expensive to transport goods, which could actually lead to goods going up in prices, thus bringing up inflation, right? That's just my example. There is a risk of higher inflation maybe later on in the next couple of months, but for now, the market did respond very positively to PCE. Now, the real question is, now that Tesla and SPY and QQQ continue to pump, how are they likely going to respond this week? Are we going to see another continuation to the upside, or is there going to be something that impacts us in the opposite direction? Just remember, tomorrow we have the PMI data coming out. This is very important because it gives economists and everyday investors some very good information about the current state the economy is in. And as it's actually lower than 50, this actually gives us more and more indications of us getting closer to a recession. Now, this is going to come out after the first 15 minutes, then the next 15 minutes after that. So for the first 30 minutes of the day, lots of data will be coming out. Expect crazy volatility in the beginning. Then for Tuesday, we have some job openings. The JOLTS data is coming out. That's very important. And then Wednesday is going to be a massive day as we have the FOMC meeting at about 2:30 p.m. Eastern time on Wednesday. Jerome Powell is going to be speaking. Get ready, guys. The market is going to move like crazy on Wednesday. All right. So that's really like the gist of what's very important for the week in terms of data. And then for earnings, we also have SoFi, Norwegian Cruise Line, and a couple of other ones for Monday. For Tuesday, we have Uber, AMD, and Ford and Pfizer. AMD is going to be a big one for Tuesday. For Wednesday, we have CVS and just a couple of other ones like Wingstop. Not as big until Thursday comes where things become massive. We have Apple, we have Shopify, we have Lyft, we have Moderna, Apple is going to be the big one, the biggest one that's going to impact the markets. And the way Apple moves approaching earnings is going to affect the market too. So if Apple kind of sells off approaching earnings, that could also lead to the market slowing down. If Apple rallies hard approaching earnings, that could also affect us big time. And finally, for Friday, we have AMC and a couple of others. But remember, the really big reaction to Apple's earnings after the market closes on Thursday will happen on Friday. So if Apple explodes on Friday and Apple has strong earnings and guidance is good, the market could rip on Friday again. If Apple does not do as well and Apple ends up crashing on Friday, the market is going to tank as well. Now, what do I think is more likely? Just to be clear, guys, I think it's a little more likely they're gonna try to pump the markets because expectations for these earnings have been lowered so much that it looks like a lot of these tech stocks are just beating and beating and beating, even though that's not truly the best way of actually interpreting the data because of the fact that the bar is so low, they're making earnings look so much better. But anyways, I also want to note that for the options chain for SPY, last week on Friday, we had 1.1 million puts expiring and the market makers knew we had a 2.04 put to call ratio. So what did they do? PCE comes out in line with expectations. Let's just rip the markets to the upside. That's what the market makers were thinking to squeeze shorts. And then for this week, we have Friday right here on May 5th. We have about 789,000 of these puts expiring. That's a crazy amount of them at 2.26 put to call ratio. Once again, max pain is pretty high. This means the market is either going to make a very big move to the downside on Friday or a big move to the upside. That will depend on Apple's earnings, or if anything, Apple's earnings could be used as an excuse to move the markets like crazy. And in my opinion, I think it's a little more likely they're going to try to squeeze the shorts again and try to hold the market up because it's a very high put to call ratio. And once again, earnings so far have been a lot stronger than expected. Many people were expecting the earnings recession to start now, for earnings to be horrible. They haven't been the best because, once again, expectations are so low, but they haven't been as horrible either overall because some guidances have been pretty good. But now going into the other aspect of this video, I want to talk about Tesla. Tesla just announced that they actually can automatically navigate to destinations based off your calendar. This is actually not really new news or anything like that, but this was on their Twitter page if you didn't know that already. As far as the news goes, I did not see anything too impactful or too huge that came out. The Model S and X are no longer available for order in Australia, so there are still a lot of them being bought up in areas like that, but they also are a little bit more difficult to actually import to different countries like that. If anything, they're not going to be reserved temporarily. And I think this could change. They did mention that there's going to be another increase in the order flow very, very soon and also inventory there. But for now, we don't have a specific reason for the decision just yet. Maybe it could change a little later. Maybe it's because the reserve button just vanished. I mean, some people are saying that. If anything, it's not really that bad of a piece of news. I just wanted to note this is making all the headlines. For the data, I have some news that's not the best. I mean, when you look at the inventory levels, they've been declining ever since Tesla announced the sixth price cut. So this means we saw very high demand for Teslas. We're also approaching the summertime. A lot of cars tend to be bought up during these times too. However, here's what's important. We're getting a bounce right here. So now we're starting to see less demand for Teslas just a little bit. They increased from 179 in inventory to about over 220 or 230. So once again, I do not want to see this continue to push up. I want to see this continue to drop down just like these levels from Q1. Even if you go like from last year and beyond, this was a very, very low the large majority of the time. Demand is slowing down a bit for Teslas. It has been impacted heavily, and that's why Tesla's been cutting prices like crazy. And if anything, I'm really hoping that Tesla does not have to resort to more price cuts if demand does end up continuing to drop, because that will negatively affect their margins big time. And so far, their margins have not been what many investors wanted. That's why Tesla did underperform quite a bit. But we'll see how it goes for the next earnings. I'm really hoping that we see a big improvement. It's too early to call just yet. The price price ratio did drop a bit on Tesla in terms of the technical analysis side of it and the data. But right here, we actually got a bounce very close to this level around this like 0.4 area on the ratio. This tells us that now Tesla is trying to stabilize a bit. It's not like heavily outperforming or heavily underperforming. It's just in the middle right now. It's kind of consolidating a bit too. Jeffries is actually giving Tesla now a hold rating. This is the latest one that just came out. They're saying hold on to your Tesla shares. They did downgrade Tesla from a buy to a hold. And overall, earnings tend to be pretty good. Mondays tend to be green about 53% of the time for Tesla. And we also tend to see the most volatility during the fourth and also during the 6th hours of the trading days. So they're very, very important. Uh, April as a whole tends to be a bullish month for Tesla, 54% of the time. So far, we didn't really get that. And finally, when it comes to the short interest, we did see a slight increase of about 20 million Tesla shares shorted in just one day. The day before that, on Thursday, we saw about 18 million. So there is a slight discrepancy. We're seeing a little bit more of it. Nothing too crazy though overall. Volume is at 122 million. That's decent volume, just a little bit below average, which is still good. As long as it's not below like 110 million, we're still in pretty decent places. And we could still see lots of volatility on Tesla depending on the news and the catalysts. I also want to note that the short volume is at 53% right now, so it's very, very close right now. That's part of why Tesla's shopping around. One side is not dictating it way too much. So now let's talk about the charts. What's going on with SPY and Tesla? So for Tesla, I just want to note that I am seeing Tesla being heavily impacted by the QQQ in the collective market. It's a positive beta stock. It also has some resistance around the 1 hour 50 EMA. However, what's important to note is the fact that the QQQ has a bearish divergence developing right now. And it's giving me some signals that we might see a pullback approaching FOMC. And I think that could actually end up affecting Tesla. But there is a possibility we could actually get an initial pop in the beginning tomorrow of the day. Tesla tries to pop up first, and then we get a bit of a sell off. I do see that as a very probable assessment. But once again, FOMC and then Apple earnings will affect us later on from there. But let's just talk about the bullish and bearish cases. Then I'm going to break down more charts. For Tesla to actually, defy some of these signals and continue to push up, we have to actually hold above 166. 165 has some resistance, so does 166. Break above this zone. If we break 165 to 166, if it manages to do that, it's going to fly for 170. And if it breaks 170 and holds it, I mean, it could just keep going 172.5, and there's like 174. It has to break 166. We're at a very critical zone. If Tesla rejects off this 166 area, all right, for a more bearish case, it would have to retest 163. We're going to need Tesla to hold 163 because if it fails and it breaks below it, it's going to come all the way down to 160 again. And 160 is very, very important support for Tesla. If that fails, we saw what happened to Tesla before. It came all the way back down closer to like 155 or so. So that would be a more bearish case. But what do I think is likely going to happen? As I mentioned earlier, I do believe Tesla is going to try to push up more. It's going to make an attempt to do so. We could see like 166, maybe even a touch of 168, but I don't think it's going to get a clean break. And I say that because of the fact, excuse me, I'm saying that because on the QQQ, there's a bearish divergence. The market's overextended and we have been overbought for quite a while. And I think we're actually due for a slight pullback. I do think that Tesla is going to reject temporarily. And we might actually see a downtrend a little bit approaching FOMC and just trade very boring and sideways for quite a while. And I believe that, right? I do believe that's going to happen because as we approach FOMC, that's when the big moves tend to come. And so far during these events, we've actually seen a more positive reaction from the markets. Now, for SPY, what else is a big red flag is yes, it's pushing up. It's relatively strong right now, but we are hitting some very strong resistance, right? This 416 to 418 zone has been very big resistance on SPY. Also for the S&P 500, it's closer to like the 4,200 area. Whoops. What's important about this is if I go back, you could actually see there have been countless times where SPY was fighting for 418, 416. For us to turn very bullish, we have to break and hold 418. If we do that, it's going to fly to the 420s. But so far, I mean, we've been consistently getting rejected, and we're also in some very overbought territory on the 1 hour time frame. So this tells me that it's very likely, even though we're not really forming much of a bearish divergence, it still is very likely that SPY is going to get a slowdown. We're quite overbought. The RSI is at 68 on the hourly. And it's very likely the market might try to actually just take a break, take a breather, cool off just a bit, and then we will get the reaction to FOMC, and the odds do favor maybe a push up. If we look at let me see, the extended hours on the 1 hour time frame, there's a bearish divergence that has developed. No guarantee it's going to play out just yet and just cause a big, pullback yet. Could try to push up a little bit first, but then it's going to react to PMI, and then we might see a pullback. That's what I'm actually aiming towards. So that's the bigger move that I'm seeing on SPY. Where are we going to pull back? Well, you have to watch where the 50 EMA is. I would say on the when you hide the extended hours and look at it, we could see like a 414 retest, maybe coming down to 411 over the next 2 days, then just consolidating, then getting ready for the FOMC meeting. On the QQQ, there's also this bearish divergence that has been developing, right? Very clear bearish divergence on both the extended hours or not, whichever one you prefer using. You could actually use either one, but I just want to note the RSI was very, very overbought right around this 321 area. Then we made a higher high in the price, but the RSI is actually not really keeping up. That tells me that it's likely in the topping process. It could pump a little bit more, maybe to like 323, 324, and then get rejected, or it could just reject from here. But we are seeing some weakening momentum on the MACD, and I really believe that we are due for a slight pullback soon. And I think we're going to pull back approaching FOMC. Maybe as soon as Monday or Tuesday, we might pop a little more and then get the pullback. And if we do pull back, we have to watch 320. If that fails, there's 317.32, which is where the 50 EMA happens to be. Now, the VIX is crazy, crazy oversold. It's been dropping very hard. And we actually have a bullish divergence that has developed. On the 1 hour time frame, look at where the RSI was 27. The RSI is now at 31.7. So the RSI has been making a higher low. If you look at, what is this? We're not really seeing it on the MACD or the PPO, but we do technically have it right here. But anyways, the RSI is the bigger one. The RSI actually has a higher low that's developing despite how low the VIX really went to. The VIX is due for a bit of a bounce. It just crashed in just the last couple of days. It should bounce a little bit and get closer to where the 50 EMA is for another back test. I think it's just very, very oversold. It needs to bounce very soon. That's the reason why I'm talking about a potential pullback in the market. At least this is another big reason for it. The VIX should bounce. Why is it going to bounce? Because of the market potentially pulling back in a very healthy fashion. I'm not saying it's a crash, just a very healthy pullback. The SQQQ is also very similar to the VIX in a way. It's actually quite oversold. And it also is forming a bullish divergence right here. Right here, the 28 level was actually tested on the RSI. It's currently at 31, but the prices gone down quite a bit. So it's likely going to try to bounce to get above 30.5, maybe even 31.5. I mean, it has this gap above. It's telling me that it's likely going to bounce very soon. The market might pull back because of that. Anyways, talking about more individual stocks. As I mentioned for Tesla, if we're bullish, if it breaks 166, it could actually go to 170 first. If we're bearish, it's going to likely retest 163. If that fails, 160 is going to come, then it could go lower from there. My best prediction, though, is Tesla pushing up to 166 and maybe a little bit higher. It could be forming a bull trap, but don't necessarily trade way too much or be too reactive in the very beginning of the day, because the PMI data is going to come out for the first 15 minutes, then 15 minutes after again. So for the first 30 minutes, PMI data is coming out. Expect crazy volatility, big swings in the markets. And that's why I'm thinking we might get a pop and then eventually just get a sell off over time and just cool off a bit on the RSI for Tesla. And it could actually come down to retest 163. If that fails, 160 could come, if not a little lower, over the next 2 days, in my opinion, until FOMC. For Coinbase, if we're bearish, watch 50. If we're bullish, watch it come all the way up to 57 for a 50 EMA test. In my opinion, it could actually come down to 50 flat. There's no clear sign of a true bounce, not even on the RSI. And even though it is close to being oversold, it's just continuing to downtrend, and we just don't really see a very good break yet. We do have a bullish divergence on the MACD that's forming. So, I mean, it is possible for it to try to bounce, but I'm not really seeing it showing strength yet to do so. It could still be developing. So maybe it drops a little more with the market and then bounces later. The dollar is pretty flat. It's not really telling us too much about the market yet. For the market to turn bearish or like really bearish, this thing needs to break out, right? The dollar breaking out would be bearish for the markets. It has not done that yet. There's not even a bullish divergence just yet on the hourly or daily, but there is one on the weekly. The dollar also has not crashed down to help the market pump very hard either, at least for like the more like immediate term for the last like couple of weeks. So I'm just seeing this trading sideways, not really doing too much. It's just a matter of a patience game. For NEO to turn bullish, it has to break above $8. If it does that, it could fill the gap to 8 point. It's like 8 point. I'm sorry, it's 8.2. Sorry about that, guys. 8.2 is where NEO could go to if it's bullish. If it's bearish, it's going to retest 7.6. I'm predicting NEO is going to try to make an attempt to break the 50 EMA and might struggle to do so around the very low 8s. Then it might actually reject and start to slowly downtrend back to the 7s as the market pulls back. I think Microsoft, I think it's also forming a potentially bearish divergence. I saw it forming temporarily. It was forming it on, I believe it was the extended hours, but for now it is very overbought and it is due for a slight pullback. It needs to cool off just a little bit. Could come very close to 300 first before it does try to make a bullish continuation later on. But for now, I am anticipating it slowing down on the MACD. Also, the RSI is once again overbought. So it could come down approaching the 300 level. Once again, for the QQQ, for bullish, could get closer to about 324.5 first and then get a rejection and come down. For bearish, watch the 50 EMA at 317. I'm predicting it's going to push up a little bit and then reject very, very soon and start cooling off. The MACD is losing some steam. I also want to warn you about the bearish divergence. And finally, don't forget about the facts that we have a lot of data like the PMI report. The market will react to that. So we might see the QQQ pop a little bit, then just cool off in a very healthy fashion and retest this 317 area. First, we have to retest 320 first, but I do believe it's very likely to do that. For Amazon, we have a head and shoulders forming right here. Could this be a trap? It's always a possibility. You have to be prepared for that. But if it does break below 105, it's going to play out. It's going to come all the way down to 103, if not 102.5. That is quite a bearish move. This will affect tech to some degree. So make sure you watch Amazon and you are prepared for that. It is looking more bearish to me. If we're bullish, though, it needs to break above 107.5. If it does that, it's going to fly for about 109.8. But in my opinion, it looks more bearish. It might try to pop a little bit in a failed attempt to break out, then it just should come down to 105 and break below it and fill the gap from there. Nvidia might pump to about 280 first and then just get a rejection and then come down to where our 50 EMA is. I'm actually predicting that it's going to pump a little bit more since it has been showing some strength recently, and there's not really a true break of this trend. So it might try to pump a little more to about 280, then reject and cool off going forward. Apple's at resistance near 170. If Apple rejects off 170, this is going to affect the markets. It could even reject off 172. But I do see Apple either pumping a little bit more and then rejecting or just cooling off a bit, retesting this 166 level, which is very close to the 50 EMA. What's important about Apple, though, is we can't necessarily be too fixated on either direction because earnings comes out on Thursday after the market closes. If it kind of like pumps approaching earnings, so maybe it cools off like Monday, Tuesday, then Wednesday comes because of FOMC. Let's just say the market bounces. If it pumps very hard approaching it, we'll have to wait and see what the numbers are. And what reaction comes from Apple is going to mainly be shown on Friday. And whatever happens to Apple will affect the entire market big time, right? A lot of these market makers use stocks like Apple as an excuse to do what they do from the back end to either squeeze shorts or cause as much pain as possible. So make sure you're watching Apple. I am anticipating it cooling off first, if anything. AMD, it's retesting the 200 EMA on the hourly time frame. It's getting very close to overbought territory, but so far not looking the strongest. It's also forming a bearish divergence. The RSI is becoming more and more overbought, and if anything, it's making a lower high compared to before. Right, so there's a bearish divergence forming. It's either going to do what the QQQ may do, it pumps a little bit more and then it rejects and comes down, or it just has a healthy pullback retest of the 50 EMA. It's got to be one of those two. That's what I'm basically seeing. For Google, Google is hitting rejection levels to a T. We have to be watching this 109 area. It got rejected off 109 many, many, many times. Right? I'm sorry if this is kind of small, by the way. 109.63 rejection, 109.5 rejection, 109 point, what is that? 109.2 around there rejection. So it keeps getting rejected off this 109 area. I don't know if it's going to break it. If it does break above it, that could be a very bullish case. But so far, if you look at the 1 hour time frame, the MACD is weakening, it's losing momentum. So it looks to me like it's going to retest 109, then maybe reject and start coming down to fill this gap, testing the 200 EMA at 104.5. Seems very likely it could pop a bit, then just reject from there. and once again pull back with the market before getting a bigger move. Meta should pull back. It's very, very overbought. MACD is weakening too on momentum. It's also, the volume may slow down with it. And in doing so, it could actually come down to about the 235 area around there moving forward. The last thing I'm going to talk about before I end the video would be the 10-year Treasury yield. This thing is at a very critical zone. If it bounces off this area it bounced off before, which is around the 34.2 area, if it bounces there, okay, that could actually become bearish for the market because it could actually get a bounce and a retest of the 200 EMA to fill this gap. If it breaks above like 34.68, that's going to become bullish for this, which is bearish for the stock market. If the yield continues to drop, that could tell us that the market has more room to pop, a little bit more room to keep going. Maybe SPY could get to 316, a little higher than that. Maybe the QQQ goes for like the 324, and then it rejects because this thing has bounced off 33.75 many times. So once again, this is telling us two possibilities. The first one is we either reject here and we just see the market pull back, or we pop a little bit more and then we just get a rejection and we just cool off in a very, once again, healthy manner. One of those two is very, very likely. I'm aiming more towards us just cooling off. We need to cool off our RSIs right before the FOMC meeting, then see a very big move depending on what Jerome Powell says. All right, guys? So always be prepared for anything, of course. News could come out that completely shocks the markets. But I'm seeing for Tesla, it's starting to chop around a lot. It's cooling off a little bit. For us to turn very bullish on Tesla, it needs to break 166, then 170, a very clean break above that. And this thing could just keep going. For it to turn bearish, it needs to break below 163, 160 flat, and then once again, the 150s will come. And what I think for Tesla, like I was telling you guys earlier, be prepared for anything, but my best assessment would be the market pushing up just a little bit, maybe in the morning, thanks to the PMI reports. We get a small push up, a small pop on Tesla. Maybe it tries to get to like 166 or so. Then it could likely reject because SPYs have some very important resistance, and we have a bearish divergence on the QQQ. Then Tesla ends up just coming down to 163, then 160 or so, the very low 160s. It may consolidate around here, approaching FOMC by Wednesday, and that's what I'm seeing for Tesla. Just a very healthy pullback. It needs to cool off a little bit. That would be completely fine. I don't really see much of a divergence right now. There is technically a bearish divergence developing. It technically has that, but there's no confirmation of it playing out just yet. Sometimes they take a couple of days to play out. So we'll see how this ends up playing out once again. But that's what I'm seeing, guys. A small push up, then a rejection, and a very healthy pullback is what I am predicting. But anyways, thank you all for listening. Watch your levels very carefully. Do what you have to do. And remember, I have some merch for you guys if you're interested in buying anything to help support the channel. And don't forget about the Moomoo link, in the description and also down below. It ends in just 12 hours. Thank you all so much for listening. Have an absolutely incredible Sunday, and I'll see you guys in the next one. Tesla to the moon with the overall market because the long term is very bright, and peace out.